Good evening, my friends and members of the Society to Advance Financial Education. I'm Steve Beeman. As always, it's a pleasure to be with you for this professional investor segment where we interview the best and the brightest of Wall Street. We are joined once again by our good friend, Mr. Geoff Garbacz, principal of Quantitative Partners, Super Stock Investor, Wall Street Rebel, and a number of other sites that are they're necessary for you if you want to manage your own money. So, Geoff, thank you as always for joining the program as we talk about what has been an incredibly tumultuous market.
It continues to be that way, that's for sure.
What do you attribute that to? If you have any insights for our members, that would be grandly appreciated.
Well, what's interesting is last week was a volatile week, and we were at pretty low levels last Thursday, and we kind of reversed midday, still finished with losses of greater than 1%. But we rallied on Friday. Nothing extraordinary about it. We were up 1.95%. And we've had two other days where we were up greater than 2% so far this year. And the advanced decline line on both those days was much stronger than it was on Friday. So I didn't expect much fall through on the upside. And we've had fall through on both Tuesday and Wednesday of this week. And it's been the first 3-day win streak of the year, which is an amazing statistic. You know, we're a month and a half in to the new year, and this is the first time we've been up 3 days in a row on the S&P 500.
Do you think some of that has to do with the Fed backing down on this idea of raising rates 4 times this year?
The futures market had figured out that was not going to happen a while ago. And then you've had a couple other things that have occurred as well. On Monday, Draghi came out and said he would do whatever it takes, whatever the heck that really means.
Right.
And then the equivalent of Janet Yellen in China came out and said that they were going to defend the yuan and take it back to a higher level, and it had come down enough already. So I think all those events contributed to it.
Let me interject something just a little bit. I'm curious your opinion just for a quick sidestep here. What do you think of Jim Rogers' comments that we're headed toward a cataclysm?
I mean, flip a coin. I mean, I can see that argument pretty easily, but you know what? It usually doesn't turn out that way. Basically, in the last 100 years, it's happened once during the Great Depression, and hopefully we learned something from that. Although I'm not entirely sure that we have really learned something, because they are kind of repeating some of the same mistakes that were made potentially in 1937.
Yeah, I was explaining on a television interview that his comments historically are true and they're valid. You can't really argue with the fundamental issues, but we live in a different world now where all the central banks are acting in synchronicity. And I don't think we have the kind of a bubble establishment where one economy and one central bank is doing this. It's all of them together, and I don't know that we know how that will play out.
Yeah, and they're all moving to, instead of from ZIRP to NIRP.
Right.
Zero interest rate policy to negative interest rate policy. And even the Fed is now stress testing U.S. banks under that scenario, which is kind of ridiculous.
You know, our good friend Doug Roberts needs to do one of these so we can bring his insights on the Fed, since he is one of the best experts you and I know.
Well, what I was going to say, I know you're talking to my partner James DiGiorgio a little later today.
Yes, we are.
And, he wrote a really nice piece on Wall Street Rebel, our free website, talking about the various nation states that are energy dependent potentially being bankrupted, and you're looking at a much bigger bailout than we ever had with TARP if these countries see oil down at these levels. I mean, we're talking about Venezuela, which now has 725% inflation, Nigeria, which just is requesting $4 billion from the IMF, Ecuador. I can go on and on and on. There's probably about 20 nation states that could be taken under by this, and that's an incredible statement to make. So,
related to that, Geoff,
James has good insights into this.
And to the folks watching, I know you watched the entire program because it's fun to have Geoff's comments through the entirety of it. But on this one especially, make sure you stay with us, because at the end of Geoff and my time, I will have James DiGiorgio with me, and he is a very interesting guy, a self-made man, truly an expert in gold, and he's got some terrific insights for you on the energy markets. You don't want to miss that segment of today's show. So, Geoff, sorry for the interjection there.
Yeah, I mean, James, not only is it gold, but he's also commodities and energy. He started a long time ago, gold and energy investor, and then in 2008, I started doing options for him, gold and energy options trader, and he's written 2 books for John Wiley over the years, on CNBC a lot. I mean, he's made some really bold and excellent calls as it relates to the gold and energy markets over time.
I look forward to hearing his commentary, but I want to get back to you because as you talk about these markets, Geoff, and some of the technical indicators, I know no one better suited to give us kind of your thoughts on where we might be headed and what the returns to traders might be in the next month.
I don't like what happened the last couple of days. I'm just going to be totally honest.
The up moves in the markets you're uncomfortable with?
Yeah, I mean, we moved up 1.95, 1.65 on 1.95 on Friday, 1.65 on Tuesday, and let's see what we finished with today. We finished, another 1.65. So effectively, we're almost 5% over the last couple days. And what's interesting is I have an indicator, an overbought, oversold indicator, and it went from 30 to 68 in 3 days. That's ridiculous. It doesn't.
Wow.
I mean, it's pretty rare to do that. And if it doesn't go above 70 and then starts heading down again, I'll know this was just all bogus.
So would you be expecting a reversal here coming up in the next few days?
Well, it's not the next few days. It's tomorrow. I mean,
Okay.
it's Thursday. I mean, if we don't continue to head higher and we start heading down again, that's a real problem. And I think that this is a much bigger problem because short interest didn't get heavy enough as we came down like it did in August and September, which made for a meaningful rebound in October and November. And the fact is, if more people got forced to cover out in the last couple of days, we only had, in Phil Erlanger's work, we only had 3 sectors with short intensity above 50%. And so for comparison to the end of September, we had 22 of the 24 sectors above 50%. So everyone's saying that like this whole thing was due to short covering, and the reality is it wasn't. And if we had the shorts cover out and we have no shorts left and we stall out here and we start heading down and stocks start falling and people start selling, there's going to be no shorts covering their positions. And we basically have been in a long squeeze market since last November.
Okay.
And so it's going to be interesting to see what happens tomorrow. Tomorrow, I think, is probably one of the most important days for the year.
So traders continue to love this market then with this volatility. I mean, you're making both sides. As long as it's moving like this, you're cleaning up.
Quite honestly, I haven't done a trade this week. I've sat on my hands just kind of watching because I didn't think that it would continue. I was like, I don't buy into this, and I'm just going to watch it and kind of wait. And we had a good last week. I'm just kind of pulling up some stuff here, gonna try and take a look at it. I mean, I did one trade. I'm trying to remember the actual dollar amount that we made. I will have it in 1 second.
You know, while you're doing that, I want to make a mention to our members. Learn a lesson from what Geoff just said. Investing is a thing that you don't have to play every day. You can wait until that setup is there for you. So just because you want to invest, don't feel compelled to. Wait until the time is right.
So the trade I did last week, I came in on Tuesday, I bought puts and closed them out on Wednesday and made 19.10% one day.
It's not a bad day, week, month, or year.
You know, look, you make 19%, effectively 20%. 20 times 50 is 1,000. That's all you got to do. So I'll get my opportunity in the next day or so. But what's really interesting is when I look at Phil's work, one thing we look at is we have an indicator called the Erlanger Big Barf Indicator, which goes into my market crash. And it's daily, weekly, monthly in chart room, but we've also found the 60-minute is very important. And what's interesting is when we look at the 60-minute, we look at what are called there's a bar chart, there's candlestick charts, and there's Heikin-Ashi charts. And what's interesting is since last Thursday, the end of the day, we've just had nothing but green candles, and we've had not a single 60-minute period that's been negative. It's charts. I mean, I go back on the 60-minute chart and takes me back into November. There isn't another time period that even compares. So this is pretty impressive what's going on right now. But I'm really worried that it's like okay, we have these 3 days and that's kind of it, and then what happens after that?
Again, I think it's just an indicator, Geoff, that the people out there who want to manage their own money need help, and they need the research that people like you provide. They need the intense understanding of these markets that comes from years of experience. Because I'll tell you, we're in a volatile time, and it's the time for big guys. This isn't a time for the amateur.
Yeah, we've had a good pickup the last week. Our Morning Matters portfolio has gained back about 4%. We're now down about 10 and change, and I'm happy with that. And we still have a bunch of positions to go in terms of doing stuff. So I've got like 5 positions where I can deploy cash and go for things. And I'm just kind of watching right here. I don't like buying up after 3 days like this, though. I'd rather get a bit of a pullback and get an opportunity. The key is going to be holding whether we hold 1900, we're at 1926, so we're halfway between 1900 and 1950. I think of the S&P always in 50-point increments, and the Dow is held in here pretty strongly. It's above 16,000, and we'll see if we can climb above. I got to see exactly where we close. Let's just do a little Dow chart here. Yeah, we've yet to get above 16,500, so it's going to be interesting to see if we can climb above 16,500.
It's interesting hearing you again, and I want to repeat this point because it's so important. As people think about trading like you're doing, I think a good analogy would be to a baseball game where the guy batting gets an unlimited number of pitches. You certainly don't swing until the right pitch comes your way, and that discipline is what makes guys like you money where all the novice people lose. Yeah,
I mean, look, if you go up to bat and the guy throws 3 balls in a row, it's 3-0. You're taught you don't swing.
Right.
You wait and see if you get walked, and if it's 3-1, then you can hit. But 3-0, you don't. And that's kind of where we are right now. It's like, okay, we've had 3 up days. I'm going to kind of wait. Like, are we going to go a 4th day, or are we going to go the other way? I'd really like to see us kind of struggle in here a little bit and get like a 25 or 30 point pullback in the S&P, which is, look, we've had a bunch of down days this year so far, and let's see my number. I want to give an accurate number, so I'm just going to pull this up here. If we look right now, we've had 16 down days so far this year, and of those, 13 of them have seen losses of 1% or more. We've only had 3 days out of the 16 where we ended up losing less than 1%. Pretty amazing statistic.
Yeah, you're seeing a lot of this intraday volatility. Then it looks worse than it ends up, or it looks better than it ends up.
Yeah, and for the year, we're still at, for the month so far, we're still at 7 down days to 5 up days. We were, after last Friday, we were 7 down to 3 up. So we'll see what happens. It's gonna be interesting to see.
Hey, I want to totally take a different trek for a minute, and I appreciate your flexibility, letting me kind of openly interview you on these shows. What's your take on the Fibonacci ratio? And I ask that because I constantly have members who buy into these very expensive trading systems, and they're all Fibonacci based. And I know in retrospect, the Fibonacci ratios are very good predictors of the past, but looking forward, I'm not so sure they are. What are your thoughts?
Oh, I'm a big believer in Fibonacci's. I think that it lets you see certain levels. Like right now, I'm going to stand up and give you some numbers here for a second.
And folks, we don't normally let people go off camera, but Geoff, we give the latitude to do it because he's our rocket scientist here.
This is a Fibonacci chart on SPY. And so what's interesting about today is we came right above the 38.2% retracement from the November high to the January low. And we got to that number, and we kind of stalled out for a little bit, and then we kind of worked our way through it. That number today was 192.72. And guess where we closed? 192.88. So the deal is the machines all know these numbers. So the trick though is knowing. It's science, but there's also an art. Like, okay, so what level do I run the retracement from? Do I run it from the November high? Do I run it from the December high? You got to have the experience to kind of understand where to run these things from. And so what's interesting is SPY just made it above the 38% retracement The Russell is still well below. It's 103 and change. I know these numbers because, like, I have to know these numbers because the machines understand these numbers. That's the reason that I got to pay attention to these things.
And again, I want to repeat for all of the masters of money wannabes who watch this program, that's why we bring Geoff on. I knew I couldn't stump him with that one.
I mean, I literally have a wall of, let's see, 5, 7, 9, 11, 14 Fibonacci charts on the most on like the major asset classes and stocks, and I am well aware of those levels because, like, if we fail at 192.72 tomorrow, that's where I want to go. That's where I want to buy puts and options index trader. You know.
Well, again, it's why we like talking to you. So many people abuse these tools, and it's nice to have professionals to do it.
You know, the amazing thing is if you read about Fibonacci, who was an Italian mathematician, yep, I believe from the 15th century, these numbers, 38.2%, 50%, 61.8%, 100%, they run through all sorts of things.
Yeah.
I mean, it's incredible. It's not just stocks. I mean, it's everything that exists in the world basically relates back to these numbers.
Isn't that fascinating? That's why the game of mathematics is so interesting. Well, Geoff, I'm going to let you go because I want to go pick up James on the other side. But I want to thank you, as always, for being with us. Anything to say to James? I'll have him on as soon as we sign off.
No, I mean, talk about that article that he wrote for Wall Street Rebel, where he looks at first the Saudi and the Russian agreement on that was announced on Tuesday morning, and then the follow-on with Iran here. I mean, I think it's all ridiculous. It's laughable, but let him delve into that.
Well, I look forward to that. And again, I thank you, Geoff, for all you contribute to our members. And to the folks watching once again, I want you to come out next Tuesday night as we talk about the safe investment clubs. Geoff and I have talked. He's willing to step up with some of this research and support the clubs with information. And that's very critical to helping you generate the kind of returns you want to build wealth in a tumultuous time. So make sure you stay tuned for the James DeGeorge segment and join me next Tuesday night as we step up and meet with all of you to talk about how to best improve things. Geoff, thanks so much, and we'll see you next week, we hope.
Great. Thanks a lot.